So I want to take a look at multiple time frame trading with Fibo Quantum. And this is the 100 period simple moving average, and I've used this on all the Fibo Quantum charts since I started reviewing this, just because traders need a way to determine trend. And there's nothing magical about these. They lag price tremendously, as do all technical indicators. But it does give traders an objective way to look at trend. Another way you can do it is through simple trendline analysis. Again, there's nothing magical about technical analysis, all right? So you just don't get hung up on that. An example of that would be, you see we come into a double top formation, price comes down to the downside. Now, a lot of traders look at this and think this is a pullback. And it is a pullback in price, but when you're trading pullbacks, what you don't want to see is strong price action. You want to see more lazy price action against you. This is way too strong. So if you are using a trend line to determine trend, one thing you might want to consider is that the last swing before the new high, make sure that is connected. All right, that gives you an objective way to determine what swings to use, because it is far too easy to pick any swing point. All right, so this is going to help you be a little bit more objective. And obviously, let me just back up here. So what I'm doing here is, when price is below the 100 period moving average on the daily chart, 4-hour trades, I'm only taking shorts. Okay, that's what we're doing here. You can see here, and let me just click over to the 4-hour chart, because just as you just saw, all we're interested in is short trades. Okay, so if we look over here, there we go. Price does break through here. This sell trade does get triggered in. It doesn't until this green line here. This green line is the breach of the 100 period on the daily time frame. Okay, so you would have missed this sell if you used the moving average. If you used the trend line, you would have got the short trade. So anyways, what we're looking at is just short trades. We don't care about the direction of the 100 period moving average on this time frame. Okay, keep that in mind. So we do get a sell trade here, and I don't know how you manage your trades. You got these take profit targets. Even though they are take profit targets, they could also be trade management targets. So at this profit target 1 here, maybe you'll take risk out, maybe you'll scale out, which is what you can do in Forex really easily. A little bit harder in futures because the contract sizes are bigger. But you do see that we do get down here. This is 193 pips. This is roughly 300. This is 400. And you do get down to this level eventually. Okay, so this is a winning trade. And you see your sell stop. So all you're looking at here, sorry, your sell stop wasn't even tagged here. So all we're looking for is sell trades. And we get another one here. This is 220. Now you see, this is what I'm talking about. This sell entry doesn't get tagged, right? So you're not in this trade. This buy does. But again, we are only looking for sell trades because the higher time frame trend is down. So we come back around and we get this one here. We get down to take profit 1. Price comes back up, kind of breaches back down here to almost take profit 2 for 200 pips. Again, this trade you don't get triggered into. We don't take this. Sell stop here. We get triggered in, take profit 1. Comes back, just barely tags this. And so it doesn't touch it. Well, let's just double check that, okay? So this is at 32.18, and the high of this candle is 32.13. So you'd be in this trade, and you'd be able to ride this trade down for 263. So this is kind of scary, right? A lot of traders panic when they see this. But again, probably what would have happened here, you would have got out at this take profit 1 or done something when price pulled back against you. Again, I don't know what you would have done. All right, we only know in hindsight what we're looking at, and what you would have done is different in hindsight than it is in live trading. Again, so we come back around, we get a sell trade into here, price drops down into all your take profits. And this one here, we got a sell entry. See, it doesn't always work out, right? Price comes back around, takes you out. Let's just double check where we are in relation to the higher time frame on this trade. Well, no, we're still below, right? So this is a legitimate trade that you could take. This is the pivot area that I pointed out earlier. So this is a trade that you would have rightfully lost on. All right. And then price comes up over here. Price is above, and then price comes right back down. So let's stay in here. Only looking for short trades. Moves over. Short trades only, right? We do get a sell trade here. Comes back and takes you out again. All right, for 155 pips. Loss. So that's going to happen, right? As trends start to change direction, it gets a little bit sloppier. And this is where, you're going to have to think to yourself, okay, well, let's see what happens. Price comes up, comes back down below the 100 period. Is this kind of price action something that you want to trade? Well, let's take a look. Let's go back to our trend line drawing rules. We pretty much have to do it like this for the most part. Now we get this kind of price action here. It's really hard because you're not seeing any sort of dip in price as you are as you're coming through here, right? A little bit different. So you can actually change your trend lines to more reflect true price action when you don't get the like if I put a line here. I know it's hard to be because I'm covering so many different topics here. It's very difficult, so I hope you're piecing together. Like in through here, this is where we are. We can also, because this price just grinded up on the higher time frame, we can actually do this. Okay, I'll go back to up to the daily chart, and you can see it's a little bit different here, right? And this is actually a price action trade. Price breaks up, breaks a trend line, comes up, retests, and moves down. So a little bit of a lesson there for you. But the point here is when price is trading in this direction and this close to your moving average, that might be something that you say, okay, you know what? Let's let this play out, right? Or you may not. You may have take these trades and take the losses, and it is what it is. Or when you're taking these trades, you're also looking at price action. Like when you just get ticked in and price comes up against you, well, that's a problem. You could also go back and just look at the trend line analysis that we just talked about. Again, nothing magical about trend lines, okay? Nothing. This might pose a problem for you. Hard slams against you, maybe you don't sit and wait till your stop loss gets hit, right? That's something that has to come through in your trade plan. But you also want to be careful you don't micromanage trades. So this was just an idea for traders that want to be a little bit more, I guess conservative would be the word, trade in the direction of the higher time frame. Different ways you can do it, like I pointed out. There's so many different ways you could determine trend. It's funny. Even just normal price action. We have a low, a lower high. Nothing worse than getting a phone call when you're making a video. Anyhow, you can see, just the price pattern of higher highs, higher lows is an uptrend, lower highs, lower lows is a downtrend. You can also do that as well. There's different ways you can determine trend. So that's that. This is just, like I said, multiple time frame, objectively identifying the trend, only taking trades in lower time frames in the direction of the higher time frame trend, and ensure that you have rules of what you're doing at these locations. And as time goes on, as traders get more in tune with price action, you'll understand things a little bit better. You'll understand that you don't want to see strong momentum against your positions. You don't want to see that. That's a problem. So this is the kind of action you'll see. Okay, well, let's say I'm short and I get so I sold here. Let's say I did. Let's say I didn't do anything here. This is a daily chart. Sorry. Let me just go back over to the 4-hour chart. So let's say you sold here. Price, this is strong against you. Maybe this is a place you kind of go, oh, you know what? This trade, I didn't get any positive reaction in my favor. I'll move my stop up into here. Totally legitimate way to trading this. You don't want to micromanage. All right, so keep that in mind. This could be something maybe you just move your stop losses here. Maybe you sit through this hard slam against you, and then you see this congestion over here, and maybe this is where you kind of go, okay, you know what? What I don't want to see in a breakout is breakouts against my position either. So if price breaks above this, you get out. Okay, you can do that as well. There's a trader that was actually the Market Wizards book that I've had the opportunity to speak with on numerous occasions, and his way of determining trend direction is simply breakouts on higher time frames. Which way price is breaking out on the higher time frames, and that will determine whether he holds on to trades or he gets rid of them. Anyways, thanks for watching.